Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. All right, the end of another quarter. Impasses in Washington over whether the government's going to stay open past Friday, causing more jitters, maybe, to the market. But Europe causing market jitters, certainly. And our panelists all try to put most of that in perspective for us this time around. We'll try. Things are happening so fast, it's kind of hard. But Shiraz Mian, our research director, is with us. He'll do his best, as will Kevin Cook, our tactical trader and senior stock strategist, and Kevin Matris, our market technician. I have to always qualify that because the headlines are coming out like minute by minute sometimes between Europe, Washington, and other stuff. That's this week now is a big week for housing data here in the U.S. But Kevin Matris, let's start with you this time around, since we don't usually. Give us a technical perspective on what's going on, since we are approaching the end of another quarter.
I thought you were going to say the end of the world.
No, I hope I don't have to report that.
Right, if you were to look at the S&P right now is down roughly 10% for the year. We are down roughly 17% from the highs that we had seen in April. So while that really isn't necessarily official bear territory, it's only about 3% from where we are right now. My personal belief is that I think we are going to take out the lows that we had seen in August. If we do, that would bring the market down to challenge the 1,000 level in the S&P. And personally, if you were to look at the charts, they have this big, ominous, bearish flag just sitting there. I think the S&P can get as low as 978. The reason why I think this is going to happen is because if you were to take a look at a lot of the other indexes around the world, China's already in a bear market, Germany's already in a bear market, Japan is in a bear market, index after index after index is already in a bear market. Now, I don't think this is going to be the end of the world, but I do believe that if we do see those lows taken out and we do go to those levels, 1,000 or 978, that's another 14 or 15% worth of pain from here, and I don't see anything on the horizon, including earnings season, that is going to prevent that right now.
Including window dressing for end of the quarter, not going to prop up the market?
I don't think so. You know, if you were to take a look at the economic reports, or excuse me, if you were to take a look at corporate profits, they have been going straight up. But lately, you had seen economic reports make an about face, and they're going this way. There is going to have to be a reconciliation, and I think it's going to be earnings. And you've already seen a couple of bellwethers, like FedEx, for example, come out. They're already starting to pull back on their projections. So I don't think window dressing is going to help.
All right, Kevin Cook, you're keeping a close ear to the street as far as the market chatter coming out of Europe or about Europe.
Yep.
What are you seeing?
Well, we had a lot of market chatter from the weekend. You know,
Right.
First of all, Geithner waving his finger saying, take catastrophe off the table because Europe seems to be moving so slow. And we've talked about policy paralysis over there. The market chatter is that, one, that they could really bump up this SF, or how does that go? European Financial Stability Facility. To
bailout fund.
Yeah, to 2 or 3 trillion. Yeah, the
Commonly
European
known as.
the European TARP.
Right.
So markets would like to see them do that. European bourses were down almost 2% in some places Monday morning here, and then reversed on that. You know, there's also talk that the Greek default is inevitable, that it's priced in. When you look at the price action in the S&P last week, it seems like U.S. equities are pricing in very bad news for Europe and still bouncing off the 1,100 level. So if the market chatter is that a Greek default is inevitable by November, and they're going to bump up the stability fund to 2 or 3 trillion to kind of put a firewall and protect stronger economies. You know, that's pretty good news. So the volatility will continue in Europe. Maybe this was just a short covering rally that we saw this morning there. Obviously, the risks are to the downside, both for the economy and the market, as we talk about here. So once we took out 1135 on the S&P, you know, we're going to continue to challenge this 1100 level. We could rally back up to 1150 on the S&P, but it's going to be down from there. The other thing from Europe is that the ECB will lower rates, most likely. Chatter is that they could do it as early as October 6th by 50 basis points, and they need to do it.
I saw that. All right, Shiraz, it all rests on your shoulders now. Matris says not even earnings season can pull this out of the fire. What do you think?
I don't agree with that assessment. I think all this doomsday talk of the U.S. economy going into another recession, of the slowdown affecting the earnings outlook for the U.S. corporates. We are seeing none of that in the market right now. I mean, we have a lot of volatility. We have a lot of downtrend in equities, but that's reflecting many of the macro questions that are weighing on the market. Yes, we were expecting for a much better growth outlook in the U.S. than what we saw. Yes, the European situation is as unsettled, maybe even more so than what it was a month, 2 months ago. And we have new questions about China.
Yes.
And all of those are weighing on the market, but we haven't really seen the type of pre-announcents, negative pre-announcements that would typically be associated with a significant drop-off in earnings. So there's still, granted, there's uncertainty about the earnings outlook for the second half of the year for 2012, and it will not be clear before we hear from management teams on the third quarter earnings reports as to how they see the underlying environment. I'll just add one more thing: that the economy was just marginally better than flat situation in the U.S. in the first half of the year. A 0.7% GDP growth in the first and second quarter. Nobody would call that gangbuster growth, but we had impressive earnings numbers in the first half. If we do not go into a recession, if we do not see a material deceleration in the Chinese economy, I don't see any reason why corporate earnings should decline.
Okay, quick rebuttal.
By the way, I'm not looking for a recession, and that's why I'm only expecting another, 14 or 15% downside from here only. But again, I don't see a recession, at least not yet. But I do believe that earnings are going to have to come down to be able to meet what's happening with the macroeconomic picture.
Just one additional point. If we have,
He's going to get the last word on this.
if we have a 1.5% growth, as the consensus is looking for in the second half, that would be double the pace of the first half of 2011.
All right, I want to see anybody have anything to share with us, chatter-wise or otherwise, about this apparent impasse in Washington over a bill that'll keep the government open past Friday. How much market impact is this going to have this week?
It adds to this understanding in the market that nothing positive or favorable will come out on the fiscal side from Washington.
Yeah.
So it is another manifestation that there is way too much dysfunction in the legislative and the executive branch of the government. And that's why it's so unsettling that the feds tried to twist all around in front of the market, but the market really ignored it.
Okay, give us your top stock pick.
Discover Financial. Consumer finance is a very cyclical element. I think consumer credit has bottomed. It's the only outlook will be stable to an improving trend in the coming quarters. And Discover has none of the legacy issues that some of the bigger consumer finance companies are exposed to. I think as their impressive numbers in last week's quarterly results showed, Discover offers good upside from current levels.
Okay, Kevin Cook.
Netflix suffered a lot of damage, but I think you want to have it on your buy list.
A lot of
here
news coming out of there
very soon, right? Let's talk about the downside first. You've got to see how many subscribers are they going to lose, because they just annoyed a ton of them, right? By splitting this up. Now people have to pay for two different services, this Quickster deal versus streaming. What's going to happen to estimates? And we obviously look at the Zacks rank. It's got a Zacks rank of number 3 right now. That could come down, so we'll watch it closely. What's happening with estimates? Well, of the almost 30 analysts that cover it, over half of them took estimates down a month ago. So say from $6.90 for next year, down to $6.75. In the past week, since this Quickster news, another half dozen have knocked estimates down to about $6.65. Still, not a dramatic hit to earnings here, to earnings projections. We've got to keep an eye on that. You look at the stock at $130, even if estimates come down to $6.50 for next year, that's a 20 PE multiple, very attractive for a growth stock with a killer franchise Who knows if they're doing this just so Apple or somebody can buy them and be more competitive, because they don't have the cash to make the streaming business what it could be. Amazon does.
All right, I got to move.
Nobody wants to buy a
Kevin
company with
Matras.
the word Quickster in it. Mine is Crocs, ticker CROX. They're in the textile apparel industry. They make shoes for men, women, kids, all this stuff.
Yep.
What I like about them is they have double-digit sales growth, double-digit earnings growth. Their margins are coming in at 2 times that of their industry, but they still have very attractive valuations. Their PEG ratio is only like 1.04, so they look awesome there. I think there was good foreshadowing, too, with Nike. Nike just came out last week, and while FedEx, they lowered their guidance, Nike came out, they posted positive earnings surprises, positive sales surprises. They upped their guidance, and I think that is really good foreshadowing for Crocs when they report. I've got a price target of 36. That is a 33% increase from here. I think that space is an excellent space. Crocs is a great stock.
Got to have shoes.
Got to
We,
have them.
All right, we ran a little bit long here, but hopefully you got some interesting perspective out of this conversation. And with everyone here, I'm Terry Ruffalo.